morning, everyone. Thank you so much for joining us bright and early on this Wednesday morning. My name is Davina Gownden, and I'm the Communications Coordinator here at RPRA, and I'll also be the moderator for this session. So welcome to RPRA's webinar on the proposed 2023 RRCEA program fees for the producers of tires, ITT, and batteries. Today's webinar will also be answering your questions. So to ask a question, you can click on the Q&A tab, type in your question or comment, and click send. There is an upvote or a like feature where you can like another person's question. You'll see a little thumbs up next to a question once it's been submitted. So if you see a question that maybe you would like answered or you would like us to really answer, you can like the question and it'll move it up in the queue. You'll also see in the presentation that we have dedicated slides where we will stop to answer your questions. We'll be trying to organize and respond to your questions that coincide with the topics that we cover in that specific section. So if you notice a question that you've asked has not been answered, it may be because it makes sense to ask it at a later section in the presentation. We also have quite a few attendees joining us in this webinar today, so it's possible that we might not get to all your questions during the allotted time. And if we can't, or if your question is very specific to your situation, we will follow up with you after the webinar. Just a reminder that this webinar is being recorded and will be posted to our website along with the presentation later this week. So if you miss anything or want to revisit any of the content, it will be available. So I'll now hand it off to Noah Gitterman, who will start us off on the presentation. Thank you.
Oops. Hi, everyone. Oh, I accidentally turned off my video, but I'm back. Hi, everyone. I'm Noah. I'm the Chief of Strategic Initiatives here at RPRA and helping to lead our fees consultation for 2023. Thanks for coming this morning. We usually, if you've done these before, we usually start off by talking a bit about who RPRA is and what we do in case folks are unfamiliar. The RPRA is a regulator created by the government of Ontario at a high level for two major purposes. One is to transition legacy waste diversion programs under the WDTA and implement new resource recovery programs under a new producer responsibility framework under the RRCEA. That's where most of our programs come from and where the ones we're talking about today come from. We are also mandated to provide digital reporting services for certain ministry programs, in particular excess soil and hazardous waste. Hazardous waste is a new one that will be launching at the end of this year. We are what's called in Ontario an administrative authority. So we're created by statute, but we're not part of government and we don't receive any government funding. All of our operations are funded through the fees we charge to regulated parties in each of our programs. And we're obligated to charge fees on a cost recovery basis only. So the proposal or the fees we're talking about today are for the tires, ITT, and batteries and lighting programs. We're right now we're consulting on fees for all of our programs for 2023. Including our digital reporting services, excess soil and hazardous waste. And the proposals for all programs are available on our website, just like this one. A little bit new for 2023 is that we're proposing fees in advance of the calendar year. This had been a goal of ours for some time. which we were unable to achieve mostly due to the timing of when regulations were coming into force. So we are consulting on fees this year in advance of the calendar year. At the same time, we've also published our 2023 business plan, which includes our 2023 budget. That is now on our website, and you can easily find it along with the other consultation materials we have on fees. Next slide, please. So maybe a bit more background on cost recovery. We, again, the RPRA is mandated to recover our costs through fees on the registrants that use our services or who we regulate. There's really three sources for fees. One is the annual fees that we charge to obligated parties in the resource recovery programs under the RRCEA. And those fees go to cover all of our costs for developing and operating the registry systems we use in those programs, compliance and enforcement, communication, other supports to registrants. We charge transaction fees in the excess soil and hazardous waste registries. So for excess soil, it's a fee for every filing. For hazardous waste, the proposed fees are related to mostly to the volume of manifesting and what's getting manifested or shipped in that program. We also charge fees to the legacy WDTA programs that are winding up. As programs wind up, the share of fees covered by WDTA goes down. And that's true again for this year, where the WDTA share of fees is decreasing. If you were around for the fees consultation for 2022, you would have heard that at the beginning of this year, we completed a review of our fee setting process with an outside firm. The review concluded that our methods and model were reasonable and consistent with our fee setting principles. And there's some material from that review, the executive summary from that review on our website. I think it's linked where on the same page that the consultation materials are on, and there's links in this deck. This deck will also be posted on our website, so any links that are in here you'll be able to access after the session. Next slide, please. Our consultation process for 2023 is very similar to what we've done in the past. We're obligated to consult on fees for 45 days and post final fees for 30 days before they can be enforced. So this consultation began on September 26th and will end on November 10th. We are doing this webinar for tires, ITT AV and batteries and lighting. There's another webinar for HSP and Blue Box, and separate webinars for excess soil and hazardous waste. So you're able to ask questions during this session, and we'll have a couple moments where we can pause for questions. You can also send us written feedback at the email address on the page here. We encourage you to send feedback sooner rather than later. The feedback we get from stakeholders about fees will get wrapped up into a report that goes to our board as part of their final decision making on setting fees for 2023. And that report also gets posted on our website. So your feedback will get, relevant feedback will get summarized in a report, and you'll see the results of that at the end of the consultation. I should note again, maybe that our business plan is now posted on our website. It was posted yesterday, so it wasn't available when our fee consultation started, but it is now available on our website, and the business plan has a bit more detail on what our budget for 2023 looks like. So in the consultation materials we posted a few weeks ago, and in this presentation, you'll see a high-level budget summary. There's a bit more detail about the budget, the overall RPRA budget, and what's going into that budget in the business plan. Next slide, please. Our approach to fee setting remains the same as it was for 2022. We're guided by our general fee setting policy, which is posted on our website. The sort of four major steps, really four major inputs into the process, starting with our budget. Again, our annual budget is developed as part of our business planning process. We do that every year. We're obligated to do a business plan every year and develop our budget and finalize it in early fall. And that's now posted on our website if you'd like to review it. Once we have our budget, we apply a cost allocation methodology to allocate costs to each program that we run. We operate on a shared services model. So a lot of our frontline services, IT operations, and other back office services are shared across programs. And that's the way we try to be as efficient as we can be. And so we use a cost allocation model. We'll talk a bit more about that in order to determine the budgets for each of the programs. Once we have a program budget, we apply a fee model to determine who pays and how they pay within each program. And then the final input is an estimate about the number of fee payers and for the resource recovery programs, the amount of material supplied. That is an input into the model, and that gets us to a final fee rate that we propose for registrants to pay. Next slide, please. Now we'll talk a bit about our cost allocations for each of the programs and fee models. As part of RPRA's budget process, we have a cost recovery target each year. So that's what we expect we're going to spend in the upcoming year. And that's driven, those cost recoveries are driven by our strategic priorities. So we have 4 strategic priorities in our business plan, all relevant to the programs we're talking about today. Number 1 is providing our registrants with accessible and easy to use registry services. So all of our RPRA programs rely on an online registry to facilitate mandatory reporting by registrants. And the portals for the last 2 portals for our programs, HSP and Blue Box, came online just a few weeks ago. We are committed to making sure that our registry services are meet users' needs, are easy to use, and are well supported both on the IT side and in terms of the sort of on the ground registry support we provide via email and phone. and through other materials as well, like training materials and FAQs and guidelines and that kind of thing. Number two, we prioritize delivering an effective compliance program to help achieve the resource recovery and waste reduction outcomes for the province. So the policy framework that RPRA, the resource recovery policy framework that RPRA implements, depends on there being an effective and efficient compliance program to hold the regulated community accountable, ensure compliance, and ensure accurate reporting, delivering an effective compliance program, and using our both our communication and compliance tools effectively is key to successful outcomes. We also provide the province with reliable and useful recovery and waste information. So in addition to supporting registrants running compliance programs, we are mandated to report publicly on our registry information, and registrants in the public and the ministry expect RPRA to publish reliable and useful information about all of the programs we run. We do that through our registry and through our website. And then finally, we are committed to building an accountable, transparent, and sustainable organization that endeavors to achieve value for money. So through our fees consultation process, business planning, annual report, and other activities, we try to be transparent about what we're spending on and why. We also try to be as fiscally responsible as we can, while also continuing to invest in our programs to make sure that we're able to achieve the regulatory and service delivery outcomes that our registrants expect and that the province expects. Next slide, please. So our budget in 2023 is increasing for a few reasons. One of the main reasons is that we have new investments proposed for 2023 in frontline staff and IT support, and that's really to drive our service delivery for those first two strategic priorities mentioned on the earlier side, registry support and our compliance program. And these new investments were necessary for 2023 because our volume of interactions with registrants is has been higher than expected and is growing. And that growth has been accelerating over the past year as we've been implementing new programs. And these investments are being made in order to help ensure that we can provide the support that our registrants need and expect when they're trying to fulfill the regulatory requirements without undue burden to themselves, and in order to achieve the regulatory and service delivery outcomes that are expected from us. And there's more information about this in our business plan that is now online for you to read. Next slide, please. So this is a high-level breakdown of our cost recovery targets by type of program. So total cost recovery is the whole pie, and then you see it broken down into the RRCEA programs. The EPA programs, that's excess soil and hazardous waste, those two registry services, and our WDTA programs. So again, the WDTA slice is declining. The EPA program slice is much bigger this year, in large part because of hazardous waste, which is absorbing much of the budget increase in 2023, but not all of it. And our RRCEA programs budget is also increasing. Next slide, please. This is another breakdown, essentially the same numbers, but showing a year-over-year increases. So you'll see the biggest increases are for the excess oil and hazardous waste programs, really because of hazardous waste. And you see the WDTA side of the budget going down, reflecting ongoing wind-up activities. So none of the programs are fully wound up yet. One of them is still active, the Blue Box program. The other programs are in the process of winding up. Next slide, please. So starting with our high-level budget, as I mentioned earlier, we apply a cost allocation methodology to develop individual program budgets. There's four key steps or inputs into that cost allocation methodology. So the starting point for each program is assigning forecasted direct costs to each program. So these are costs that aren't shared services, but are direct to the program. The biggest part of this cost, I think for all of the programs, is the cost recovery amount for that program's registry portal. So all of our registry portals, they're all now built and live. We recover the cost for those. The cost for those portals is amortized over a 10-year period. So those portals are paid off over 10 years, and the current year's share of that amortization is charged out to each of the programs plus interest. In addition to that, there are some common registry foundational costs that are assigned to each program on an equal basis across all the programs. Sometimes for programs, there are also some professional fees or specific IT or registry related expenses that are particular to a program, and those will get assigned directly to that program. But the major component of the direct costs is the costs for the registry portal, amortization plus interest. The second input are the indirect and shared costs. And the indirect costs are kind of general administration costs that are shared equally across programs, generally speaking. And then we have shared services costs, including IT services and registry support services that tend to be driven by volume of activity. And those are assigned to each program using cost drivers like the number of registrants in the program, which is a key driver of the amount of support we need to provide to that program. The third input are contributions to our operating reserve. We maintain an operating reserve that is used throughout the year to help us manage our cash flow. And each program contributes to that reserve based on that program's proportionate share of total expenses. So if it's a bigger program, it'll be contributing more to the operating reserve. And that's true for all of our programs. finally, there are contributions to pay off program startup costs that were incurred when RPRA was created, and those are allocated out equally to each of our active programs. Next slide, please. So using that cost allocation method, here's the breakdown of budgets for each of our programs. The new one on here for 2023 is hazardous waste. We're charging or collecting hazardous waste fees for the first time in 2023, and it's fully operational for the first time in 2023. So that is one of our big new programs, which is absorbing relatively high share of the budget increase for 2023. Next slide, please. So in the next few slides, we have a further breakdown of the program costs for each program. I don't think this breakdown was available in the consultation material that was posted on September 26th, but we have it in this presentation, and again, this will be posted online with a recording of the session. So you can, you don't have to write all this down. You'll have access to it after the session. But again, you see some of the key inputs I talked about earlier: the portal amortization and interest, share of the shared services cost, and the startup and reserve contribution to get to the total budget. Next slide, please. I think the next one is ITT AV and batteries. Again, you see the same breakdown here. The interest amount for ITT and V and batteries is higher, even though the amortization amount is the same, in part because those portal costs were termed out later than tires at a slightly higher interest rate, and because there are additional foundation costs. I think ITT AV and batteries is absorbing slightly more of the foundation costs than, because it's two programs together, than tires is. Next slide, please. Lighting program costs, again, a similar breakdown, showing the total program cost at the bottom. Next slide, please. So I think we're pausing here for questions before we get into a discussion of the fee model and the fee rates.
Yes, so we have a couple of questions in the queue already. One is referring to when you were talking about the cost allocation methodology. This participant is asking, when you say equally, do you mean proportionally based on some sort of percentage when you talk about, I think, the shared costs?
So and on that cost allocation slide, when it said equally, it meant equally. So for example, registry foundation costs are shared equally across each of the programs, meaning each program contributes, I believe, an equal share to those common costs over time. The contributions to the operating reserve are proportional, so it's based on that program's overall budget share relative to the other programs. That determines how much of the operating reserve contribution it takes in. So hopefully that answers your question. If not, feel free to follow up. You can, if you don't have questions in this session, or they come up later, or you still even have you still have your question after I've tried to answer it, you can submit questions to our consultation email address along with other feedback.
Thank you, Noah. Just one more question. Will the fees for RRCEA programs, such as lighting and tires, be included in the base price, or can they be a separate line item on invoices?
So I'm not totally sure how to answer that question. I believe when you're paying fees, if you're a participant in multiple programs, you should be getting, you'd get a separate invoice for each program. If you're talking about RPRA's invoices, if you're talking about the invoices, if you're talking about invoices to consumers and how RPRA's fees or other costs for resource recovery get charged out to consumers, then the answer is that depends. You should email our registry team for help with that question. And I believe that's registry@rpra.ca, and one of our compliance officers can help you with that.
Great, thanks, Noah. I don't see any other questions in the queue, so we can move on to the next slide.
Great. So let's dive into the fee model. The fee model is essentially the same model that we proposed in 2022. We are proposing to assess variable fees for producers who supply above a certain threshold. For tires, the tires program, it's a per tire fee. For the others, it's a per kilogram fee. And then a flat fee for producers under a certain threshold. And we're again proposing that we're not like last year, we're not proposing any fees for service providers or other registrants, only producers. We are proposing to increase the flat fee for small producers from $75 to $85. And that's to reflect RPRA's, in part RPRA's budget growth. The fee for small producers has been $75 since we first set it up in 2018. This model, just like, again, is the same as last year's, and is aligned in RPRA's view with the policy objective of holding producers responsible for what they supply into the market, and is consistent with our fee setting principles, including equity and simplicity and predictability. So you can read more about that here and in our some of the other materials on our website, including the report from the outside consultant on our fee approach to setting fees. Next slide, please. A bit more about the fee model. So again, I mentioned that we're charging fees on producers, not service providers or pros, similar to past years. There is a threshold which is different for each program to determine whether producers pay a flat fee or variable fee. Tires is a per tire fee. The other programs is a per kilogram fee. They're like in past years, if there is a surplus or deficit in the program, so the difference between revenue collected and actual expenses at the end of the year gets trued up within that program. So if we over collect from a program compared to what we actually spent, that surplus stays with the program. Likewise, if there's a deficit in the program, we under collect compared to what we spent, that deficit stays with the program and gets carried through into future rates. because we're now setting our fees before the end of the year, so we'll come back to set 2024 fees at the end of 2023. And because when we're setting fees, the year is not finished, it's likely in most cases the surplus or deficit will get carried through in sort of 2 years ahead. So for example, if there's a surplus or deficit for 2022, because we don't have year-end figures yet, those will get wrapped into the 2024 rates that we set in most cases. Rather than getting wrapped up into the 2023 fee rates, because we just don't have the end of year data yet. But that surplus or deficit does still stay with the program. Like in all of our past years, we've combined the ITT, AV, and batteries program for one fee rate. Next slide, please. This is a comparison of fee rate changes year over year for each of the programs. We're showing what we're calling the base rate and the adjusted rate. The base rate is the rate that's charged without considering surplus or deficit. And so in particular, tires had the benefit of a surplus last year that brought the fee rate down. Batteries and ITT-AV had a deficit, the substantial deficit that was in large part because our estimates about the amount of volume in the ITT-AV program was too high. And so that deficit brought fees up last year. And then we're comparing that to what we're proposing this year, our proposed base rate. And again, we're not proposing to include surplus or deficits in 2023 to the extent there are any, because the 2022 year is not finished in terms of revenue collect and expenses. So if whatever difference there is for 2022, that'll get wrapped up into your 2024 rates. Next slide, please. This is a more detailed breakdown for tires, and we'll go through each of the programs. So we're proposing 17.6 cent per tire fee, and an $85 flat fee for smaller producers. The fee structure is the same. The base tire fee is going up. And you can see below our estimates in terms of supply. So again, just going back to the inputs into our fee setting process, once we have a fee model, that's a flat fee and a per tire or per kilogram fee, our volume estimates about the number of producers and the amount they will supply determine what the fee rate is. So as supply changes, that fee rate can also change. And you'll see what our estimates are for tires for 2023. Next slide, please. ITT, AV, and batteries, again, the same fee structure, $85 flat fee. So that's an increase again, which we're doing across the board. The per kilogram rate, you can see is about 5 cents a kilogram. That's less than the rate last year. The rate last year, though, as I mentioned, was increased because of a deficit carryover we had, which has now been addressed, and our estimates for volume that you see here have been updated to reflect better data about the amount of volume that's getting reported in the program. Next slide, please. And finally, our lighting program. Again, similar structure. We've adjusted the threshold, I believe, for separating small and large producers to better align with what's in the regulation. The estimates for lighting are still based on the same sources that we used in 2022, because the lighting reporting campaign for 2022 has not been completed yet. So this estimate of volume will get adjusted again when we come to set fees for 2024. But just like last year, you can see on this slide how we've tried to estimate volume for this program in light of the fact that it's a new program with no legacy information to rely on. Next slide, please. So now I think, Davina, I think that was the last slide with substantive comments. So yes. Now we're available for questions again. And then I think there's still a wrap up to remind folks about how to provide additional feedback.
Yes, exactly. Thank you, Noah. We do have a couple of questions in the queue. The first one is, could you share more information on why the fees for lighting were increased by at least 15% since this is a new program and there is not yet experience with the actual program expenses? Is it all connected to the shared services increase?
Yes, that's right. It's connected to the shared services increase. So we're expecting in 2023 an increase in effort for the lighting program, like we've seen planning for an increase in effort in the lighting program, like we've seen with the others, particularly in terms of our IT support to support the portal and our on-the-ground registry support. So lighting's share of the shared services cost is increasing.
Thanks, Noah. I also have a question here about RPRA recommending that, or sorry, a participant recommending that RPRA shift to flat fee for participants, specifically for ITT-AV, just because they claim sales are declining and there are different economic conditions. Could you share any insight on that?
Yeah, so we've had this, we've received this feedback in the past and have considered it seriously. We did look at this option as part of our fee model review with our outside consultant. A shift to flat fees across the board would shift the burden of cost from larger producers to smaller producers. Also, the per kilogram or per tire fee ensures that on a per unit basis, our fees are the same for all producers. So there's no competitive or market impact to our fees. We think that the variable, sort of the per tire or per kilogram fee, is consistent with the overall goals of the resource recovery policy framework to hold producers responsible for what they're supplying into the province.
Thank you. I also have a compliance-related question, but perhaps, Noah, you could give a bit more information. So this participant is asking if a company sells small appliances with batteries, but the company doesn't produce those batteries, they are then exempted. Only the producers of batteries are to report and contribute.
So I can't answer that specific question because that's a compliance question for our compliance team. So I would encourage you to reach out to them. Again, I believe the email to use is registry@rpra.ca. At a high level, though, what you're saying is correct. The producer, these fees apply to the obligated producer under the program. If you are not obligated to register and report as a producer, then you would not have RPRA fees to pay.
Thank you. And one more question we have here is, this participant sees that the 2023 budget for tires is $2.3 million, and they're wondering what was the budget and actual for 2022?
That's a good question. I don't know that offhand, but we can follow up with that information after this session. So I'll look to my team. I don't know if what the best way to do that is, if we can reach out directly to the individual asking the question, or if they should submit the question into our consultation email box.
Yeah, they can definitely submit the question to consultations@rpra.ca. That would be the best way of getting a direct and quick answer. Thank you. I'm just going to take a quick pause here. We're going to be launching a poll. We'd love your feedback. So we do this after every session just to get any feedback and help us learn and gain some insights in our future webinars. So if you could please fill this out. I'll just leave it up there for a few more minutes and then I can hand it back to Noah. In just a few more minutes. Okay, I will close it off now. Thank you so much for participating in the poll. And Noah, back over to you.
Thanks. So I do have an answer. The person is still online for the question about the tires cost recovery target in 2022. So that was $2 million for 2022. But again, if there is more detail you think you need, please email us at the email on the screen. And if you have written feedback, please send it to the email on the screen. Again, the feedback we receive both in these sessions, which all gets recorded, and through our consultations inbox, gets summarized in a report that goes to our board, and that is an input into the board's final decision on fees for 2023. And that report that the board sees also gets posted, gets finalized and posted on our website once the consultation is over. So if you're interested, you can see consultation reports for past consultations on our website. I give you a sense of what they look like, and also what how RPRA has responded to common feedback themes in the past.
Perfect. Thank you so much for joining us today. I hope everyone has a great day. Thank you. Bye.
Thank you.